Hey, if you wanted to know how to have residual income as a loan officer in the mortgage business, you're listening to the right episode. I'm your host, Steve Kiles. You're listening to the Loan Officer Leadership Podcast powered by the Mortgage Marketing Animals. And Carl, what a conversation. Residual income in the mortgage business. What? Who would have thought?
So let me give you the backstory of where this came from.
This is great.
I got a very dear friend of mine, actually a couple of them, but I got one in particular, a very dear friend of mine that's in the insurance business, right? He owns an insurance company and he does well, like he does real well. And he knows that, I do, and you do, Steve, we do pretty well too. But he's always kind of jabbed at me in the ribs a little bit about how, as an insurance agent, that he gets residual income. In other words, like I've got my homeowner's insurance through him.
Yep.
And every year I pay him again and again and again and again. And so once he signed me up the first time, I've got to have a really good reason to switch insurance companies, right? Otherwise, I'm just, I got to do it every year.
Yeah.
And even I own my house free and clear, I still got insurance, right? I'm not going to, it'd be, in my opinion, stupid not to have homeowners insurance, right? So I started thinking about this. He said, Carl, you're unemployed at the end of each month. Every month, you got to go out and get new loans. Got to get new loans. Got to get new loans. Got to get new loans. He said, I sell one time and I get it year after year after year after year after year. Right. So we kind of jabs me about it. And we, poking fun. And I started thinking about that. And I went, now, wait a minute. As loan officers, we do have residual income. Or let me rephrase that. We can have residual income if we do the right activity. So let me read the definition. I actually went in Webster's dictionary and grabbed the definition of a residual income. And it says residual income includes earnings that involve some work to get started, but then profits continue to come in after the original work is completed, right? And so I started thinking about that and I thought, well, wait a minute. We kind of do have residual income. So, and I think we have it from at least 4 different sources. So I thought on this episode would run through how to get residual income. Sound good?
I love it. Oh, dude,
right.
Well, and that's the key. You think, man, I want to be able to have a business that continues to produce. And so this is great. Talk about it. So what are you thinking about in sources?
All right. So let's take, and I think, look, we all have these things. I think we just didn't recognize it. Like it's been right in front of our face and we didn't see it, right? So first of all, let's talk about, look, if I'm going consumer direct, he's absolutely right. If I'm buying Zillow leads, nothing wrong with doing that, I suppose. But I have to understand they're going to convert at about 1%, maybe 2%. So I got to talk to 100 people to close a loan. It's not scalable, right? Mm-hmm. And then I'm fired after end of each transaction, right? So there's nothing wrong with that. Just understand what you're buying, right? Well, the other way, if I'm getting referred business, remember our definition was some work at first. So let's say I find Realtor Lisa.
Mm-hmm.
Realtor Lisa in the last 6 months has closed, say, 10 buyer sides, right? So I got a good agent, right? Good agent. Well, once I do the initial work involved, hence doing the daily success plan, right? Which is where I meet up with her and give her good reason to refer to me. And then they start referring to me.
Yeah.
Realtor Lisa doesn't refer me once and never again, if I'm following the plan, of course. Like Realtor Lisa sends me over a minimum of 1 referral per week because she's got, 10 listings and people call her listing signs. She gets some online stuff. And so she's sending me these leads week after week after week after week. And in many cases, year after year after year after year. My average referral partner is about a 2.5-year lifespan, by the way. So I've got a weekly residual income on average for 2.5 years. Right. So 52 weeks in the year and the average one, we're talking like 125 referrals.
Yeah.
Right. Week after week after week after week after week. These things come in. I call that residual. Right. So that's one way. I do the initial work up front, getting her to start referring to me, walking through the daily success plan program. And now that those leads coming in, man, it doesn't take much to keep those leads coming. It reminds me of the old pump whale, the water pumps, where you see somebody, there's a lever on the side and you have to, those of you just listening to this, it's like the old farm pumps where you have a little lever that you pump, and it takes a little bit of work for the water to start coming. But once the water starts to come, you only have to pump just a little bit, like just every now and then you just give a little push and water keeps, coming out. So that's one way, is with my referral partners, I'm getting residual income from them. Well, then,
hey, hold on, look, Carl, and you know what's interesting? Like that goes back to not only is it residual, but it's predictable. Because if you know how many qualified Focus 40 agents you currently have, it's what you and I've been talking about for the last 30 days. It's, you tell me how many qualified Focus 40 agents you have, and we can tell you how many leads you'll get and how many leads you'll close. Brother, it is shocking. Somebody who has 10 Focus 40 qualified agents is going to get about 25 relationally referred leads a month. And that 25 is going to turn into between 5 and 7 fundings a month, depending on how good your conversion is. And the residual, following the daily success plan, what's so powerful is you don't have to even guess what my residual is going to be. By measuring what you currently have with the qualified Focus 40 agents, you can actually know, hey, if I want more, guess what? We got to go get more relationships, because those relationships are the residual income. Hey, and by the way, I was going to tell you this. I have a well pump. I don't think you knew that, but I have I have two 400-foot wells on my 5 acres. And you got it, dude, it's hard. It takes 5 to 7 minutes of just hard pumping to get that water up that 400 feet. But once it comes, man, it's so easy just to keep that water going.
Gallons and gallons and gallons of water.
And very little effort. And that's what residual and predictable income is.
That's it. So now then, once I'm getting that predictable income coming in from my referral partners, then now I've got deals in the pipeline. Now that I have deals in the pipeline, I've got a listing agent, right, on that deal that I might not be working with, that now I'm working with them. I've got a title company that can start referring to me, get a lot of referrals from the title companies. They refer us to other agents. I've got a borrower and I got a co-borrower that has friends, family, and coworkers, that 27% of all loans that close as the 27% of all loans use the loan officer that they were referred to from a friend, family, or coworker. So now that I have a borrower and co-borrower, this is another predictable residual income source of income that is coming in from the deal. So again, as long as I'm following the daily success plan and making those phone calls on my, what we call the Just Ask or the Tuesday update calls every single Tuesday, I do very little effort, and we get even more loans come in. Once those loans close, now I have a past database.
Yeah. And that's where it gets exciting, because we talk about that at the boot camp. For every 100 past clients, we see results of 1 to 3 more closings a month per 100 past clients,
which is residual income.
Residual income. Yeah.
So let's say I have a past database of even a modest one of, say, 300 people. That would be on average anywhere from 3 to 6, maybe as many as 9 loans a month of residual income coming in. Now, do I have to do a little bit of work? Sure, I've got to call them up a couple times, couple times a year. We send them out a little snail mail, asking how things are going. No, I mean, this is very little effort of work. And so it's a very, very small effort of work. And yet this is a very predictable over years, over decades, that I've seen this over and over and over and over again, in my own mortgage business, that we get the past database referrals. In fact, it should get, so at some point, your main source of loans is from your past database, as a residual predictable income. And then once they refer me to somebody else and we pre-approve those people, that's another predictable residual income of the people that I pre-approved. Not only do we end up getting their loans, but in the process of being approved and in the process of out looking for homes, we use a script to those people where they refer us yet even more friends and family. And you end up with like, dude, it's like this, like in the old Amway days, where it's you tell 2 people and then they tell 2 people and they tell 2 people, and you end up with this, tree of money.
Yeah.
People say money doesn't grow on trees. It kind of does. It kind of does. Now you got to plant the tree, right? It's not magic. You got to plant the tree. You got to fertilize it, right? You might have to go stake it up and hold it up, and a big storm's coming or freeze is coming. You might need to cover it up and take care of it a little bit. But money kind of does grow on trees. And as a loan officer, we can absolutely have residual income. We just have to do a little front work to make it happen. And once you do that little bit of front work, though, man, the profits from it are impressive, like real impressive. So,
well, hey, and I tell you, it goes back to number one, having a plan. Number two, having simple structure that executes a very simple process to get predictable results. And those predictable results lead to consistent residual income. I actually was giggling because that's 4 forms of residual income. You should be tapping your insurance friend and saying, you got 1, we got 4. It's a poking back and forth.
Well, I'm pretty sure I actually make, I don't know if this is the right place to say this, but we both know that when I say both him and I know that I think I got him clipped on the income. He makes good money, right? And my hat's off to him. But he ribs me on the residual income thing, but I think we both know. I don't think he knows how my residual income goes. And frankly, I didn't think I knew how my residual income came until I started thinking about this. And I went, well, wait a minute. I've had this all along.
Yeah.
I just didn't know it. It's kind of like one of my favorite lines in song lyrics. I love studying song lyrics and kind of a poetry thing. And one of my favorite lines is in a song that America sings called The Tin Man. In that, there's a lyric that says, Oz never did give nothing to the Tin Man that the Tin Man didn't already have. And so we've all have had this residual income.
We didn't even
we just didn't know it. And once we identify it and we go, all right, that's the secret sauce.
Yes.
Now we need to water and fertilize and cultivate and focus our attention on there instead of, I don't know, spending 2 hours a day wondering what the rates are going to be in December. Who the heck cares?
Yeah.
Rates go up, rates go down. They go up for everybody. They go down for everybody. Everybody's about the same. I don't give a rat's butt. I'd love for rates to be in the 2s. Right. But I don't care if they're in the 10s. I've sold loans at 10s, 11s. I think my highest was 12% interest rate over the last, since, times of it. It doesn't matter as long as I'm doing the right activity. So instead of focusing my time and effort on things that I can't control, I'm going to focus my time and effort on the things that I can control, which is my sales activity, which is setting me up for residual income. That's the secret sauce.
Hey, and what a great perspective, because now you start treating it like a business instead of just another phone call. No, it's important that I follow the structure, the daily success plan, because if I do it over time, I'm building a business of significance. And it just makes you think as a business owner and not just a loan officer. And it's a phenomenal perspective. Hey, and if you're listening today and you're saying, what are you talking about? Daily success plan. I'm really good at getting loans, but may not have a lot of structure on some of the things that'll help me produce residual income. Go to freedomplanningcall.com, freedomplanningcall.com. We'd love to invest 45 minutes just to lay out the plan, show you literally how you can put such a simple 4-part plan into your business today and see massive results over your lifetime, and maybe even the next generation's lifetime. Carl, it's what a great aha opener. We got predictable residual income and a simple plan. freedomplanningcall.com. Check it out. We'd love to spend some time with you. Carl, what a great episode, man. Great. Hey, you know what it is? I bet you it's you on that bike ride. You just, he nudged you, you poked the bear and you're like, we got residual income. Let me think about this on my 40-mile ride.
I got your residual income, buddy. Don't
I got it. Let me figure out where it's coming from. But the way you say it is so true. And when you do the right activity, it's coming, because the right activity produces results. So for our listeners, thank you for being a part of the community. We're honored to be on the journey. Go out there, continue to do the right activity, see big results, and live a life of freedom. Remember, anything we're doing is worth doing badly. Just get started. See ya.